Hello guys, today, we'll delve into JI YUE Motors' new collaboration and Barclays' downgrade of NIO stock. Let's uncover the details together. So in this video, I want to talk about JI YUE Motors' new partnership and the Barclays downgrade of NIO stock. So, friends, NIO has recently partnered with JI YUE, which was previously known as Jihu Motors. This company is owned by Geely and also by China Google, Baidu, with Baidu holding about 35% ownership. It's quite impressive. But this partnership isn't the big battery swap partnership that the head of New Power hinted at. It's just a small charging partnership, and they will use NIO chargers. So, this is very good. Their car is the JI YUE 01, and this really shows the importance of NIO infrastructure. Currently, NIO has 3,747 charging stations with 21,800 chargers. In addition to that, they have 2,397 swap stations. Alright, so in total, NIO has more than 6,000 units of infrastructure. Alright, charge and swap stations. And this is 3 times more than Tesla. This shows that eventually everyone will have to work with NIO. NIO is becoming a global powerhouse in energy replenishment. Whether it's charging or swapping, NIO is number one. Alright? Now, Jihu Motors was previously 55% owned by Baidu, China Google, and 45% by Geely. But Baidu didn't have a license to manufacture cars, so they created a new company, JI YUE, which is now 65% owned by Geely and still 35% by Baidu, to solve this restriction problem. Still, this is a very important company for Baidu as well. Baidu is one of the most important companies, but Baidu cannot make cars, so they have to partner with Geely for this car. So in a sense, this is also a partnership between Baidu and NIO. Alright, now let's talk about Barclays downgrading NIO stock. This had a significant impact on the stock price yesterday. First of all, it's crucial to note that Barclays holds a short position on the stock. Alright, they have a short position with put options. So let's see, Barclays bought put options on NIO stock on February 15th to cover 545,000 shares. So this is quite crazy. They also have stock. They have 1.8 million shares at $16 per share. But still, they bought put options for 545,000 shares. So it's important to note that they are long holders, but they also maintain a short position, which means they want to short the stock. Now let's talk about why they issued a warning. Why are they saying, sell NIO stock? What's happening? So analysts are seeing downside risk. And the article doesn't say much about it. It says that Morgan Stanley has maintained a price target of only $10. But Barclays didn't share that view. They downgraded NIO and set a price target of $4 to $5 per share instead of $10. They said that weaker March sales suggest that NIO is having difficulty selling its 2024 models. Friends, I strongly disagree with this. Deliveries haven't come yet. Alright, deliveries are increasing from 2,000 to 2,200, 2,300, 3,500. Last week it was 3,500. It's increasing. The new policy adjustments are very favorable, and deliveries are increasing. And I also got confirmation yesterday from NIO manager, who said that April is also going to be a very good month. Deliveries will also be good because the new subsidy policy is so favorable. The inventory of cars is disappearing in less than 2 minutes. They vanish in less than 2 minutes. They are doing well in terms of sales and deliveries. However, the impact is not yet visible. And this month, in April, perhaps there will be more than 10,000 deliveries. Maybe it can go up to 15,000 or even 18,000. They have very strong orders. But it has been said here that deliveries were lower in March, which was below expectations. NIO Q1 deliveries came according to the revised guidance given on March 27. But it was slightly lower than the original guidance given on March 5 of 31,000 to 33,000, according to Barclays. It is important to note that the sales momentum of the new 2024 models remained weak, which were launched in early March. Then again, they launched new models. Alright, people test drive them, and then it takes about 21 days from manufacturing to cards. It's not immediate, okay? It's not like they launch a car and people immediately get it. No. Alright. So with all the promotions, it takes time for the impact to be seen. With limited new product launches and pipeline planning for the rest of the year 2024, we see a significant risk that NIO may not meet consensus estimates for the rest of the year. Yes, they also have a sub-brand car. I have heard that the sub-brand car is going to sell a lot. And they are also incentivizing many good policies. They have good policies. And there is a very big factor that is boosting sales. NIO has done another big thing. Very big, which will boost deliveries a lot. And this is confirmed. Alright, looking at the long-term picture, Barclays says that the electric vehicle market in China is becoming even more hyper-competitive. And yes, indeed, it is becoming very competitive. But in the end, not everyone has a moat like NIO. Everyone can be undercut. When Xpeng G6 came out, everyone was saying, wow, this is so good, so cheap for these specs. It's a very good car, has an 800-volt architecture. But then it was undercut by the IMLS6, which was a similar car, but cheaper and with better specs. And now that car is not performing as well. So, this is just a fact. Alright, just a few months later, nothing remains. They don't have any competitive advantage. NIO has battery swapping in the segment where NIO competes, which are higher-end SUV and sedans. Huawei recently entered the market with the best-selling SUV and will soon launch another model. And BYD higher-end brand Denza D9 is upgrading existing models and launching new ones, according to Barclays. Yes, you spelled it wrong. It's Denza, right? Alright, AITO has many good-selling hybrids. EV, M7 is selling very well. M9 is also selling but not pure electric. Alright, when it comes to pure electric luxury, NIO is number 1. Price above 300,000 RMB. NIO SUV is number 1. Alright. In the aftermath, they believe that NIO is now facing stronger and bigger competition from these powerful and larger competitors. As a result, NIO may feel the need to acquire essential skills and resources. This is nonsense. I do not agree with it at all. They have enough resources to achieve success. Everyone is trying to partner with NIO because of its infrastructure. Infrastructure is NIO moat. NIO is making a lot of money from its infrastructure as well. So, I completely disagree with this. Big competitors do not have a moat like NIO. Look at what's happening with Hi-Fi. They are failing because they don't have a moat, they're luxury, quote-unquote luxury. But there's no moat, no battery swap. It's just a hassle to own the car. No one is buying their car. So NIO is the better choice to buy. So, ignore this. They just want your shares. And this is just FOMO. Nothing they say is valid. They don't know what they're talking about. They tell you to buy the stock at 60, saying it will go up to 80. When it goes down, they say, oh, sell it. I'm saying the opposite. You should do the opposite of what they're saying. So yes, this is just my view on it. You do what you think is necessary. Obviously, the stock hasn't taken this lightly either. The stock is down in Hong Kong. It seems like the market is about to open, and the stock will go down a bit more. But I firmly believe that this is just nonsense. They don't know what they're talking about. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.